This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Dramatic sell-off. Stocks slid sharply on concerns about the health of a major bank. But it's not a U.S. bank. This one is German.
Deadly commuter crash. It happened during the morning rush at a major New York area transit hub. Now the focus is on a high-tech safety system that trains are not yet required to have.
Slowing down, homebuyers retreated in August, and high prices and few choices may be to blame. Those stories and more tonight on Nightly Business Report for Thursday, September 29th.
Good evening, everyone, and welcome. Drama in the markets today. A quiet morning didn't stay that way. A couple of hours into trading, stocks dropped sharply. At one point, the Dow Jones Industrial Average was off 250 points. It finished down 195 at 18,143. The Nasdaq fell 49, and the S&P 500 was off 20. Now, the reason for the swoon, a Bloomberg report that some hedge funds cut their exposure to Germany's Deutsche Bank. That sent shares of Deutsche Bank to an all-time low and rippled into the U.S. financial sector. That's because the report was reminiscent of the financial crisis, when investors sold on news of counterparties pulling business with banks like Lehman Brothers and Bear Stearns. And that nervousness seeped then into the broader market. Bob Pisani explains why.
The markets were fairly quiet midday when a report from Bloomberg on Deutsche Bank dropped the markets. They reported some hedge funds that cleared derivatives trades with the bank had withdrawn some positions. It's a possible sign of concern about doing business with the bank. It's not much of a story, but it did revive long dormant memories of 2008. Deutsche Bank dropped 7% on this. European banks that trade in the U.S. dropped about 3%. U.S. banks dropped. J.P. Morgan dropped 1.5%. And the S&P dropped nearly 20 points before recovering some of those losses. Now, wait a minute. What do possible issues at Deutsche Bank have to do with J.P. Morgan? On the surface, there's not much. But in the post-financial crisis worldview, it doesn't take much. The concern is that if Deutsche Bank did go under, it would cause a crisis of confidence in Europe. Never mind the chances are small that would happen. It's small, but it's not zero. And problems with one bank could lead to higher credit costs and slower economic growth in general. And remember, markets hate uncertainty. Traders losing confidence in your viability as a bank, that was a big issue in 2008. What about the rest of the market? Why, for example, did Whirlpool drop $2 on this? Well, the simple answer is that today's trading action is dominated by traders who will pull their bids when there's market uncertainty. When you have heavier volume, fewer bids, prices drop to attract the buyers. You throw in trend-following programs, momentum guys, and that will more than adequately explain how stocks that are not correlated could drop together. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So should we be worried about the health of the U.S. banks, or are today's fears overblown? Jack Micenko is the banking analyst at Susquehanna Financial Group. He joins us now to discuss. Jack, welcome. Always a pleasure to have you with us. What did you make of today's action, specifically as it referred to Deutsche Bank?
So the Deutsche Bank news is really, as Bob had said earlier, reminiscent of what happened in '08. When customers stop doing business with their brokers, it becomes a self-fulfilling prophecy. And it becomes a crisis of confidence. And I think people, memories are short, and I think the weakness in the broader financials today was then an extrapolation out to say, hey, look, these had a really bad impact on the rest of the economy when those firms went down. And I think that was being priced in to some extent today.
A lot of people sell and ask questions later. So let me ask the questions. Is Deutsche Bank in trouble? Are any U.S. banks going to be struck by any kind of contagion?
Well, anytime you hear of clients pulling back, that's a concern, because that creates more concern from incremental clients, and it becomes sort of a snowball effect. Deutsche Bank's also highly levered. Now, I don't cover Deutsche Bank. I do cover the U.S. banks, and there are very little parallels to make to the U.S. banking system. The credit quality in the U.S. banks is pristine. It's better than it's been in a decade. Loans are growing. Housing is doing very well, even though we had a down number in August. on a year-to-year basis, housing continues to grow very nicely. And we're just not seeing any of those kind of issues. And in fact, for some of the banks in the U.S. with market exposure, customers pulling back from Deutsche Bank may create an opportunity for names like J.P. Morgan and Bank of America to do more with those customers
in other words,
as they take share.
It might help the U.S. banks because of the pristine balance sheets and because of the perception of more safety.
Absolutely.
What about the Fed? Does this type of an event, especially if the selling continues, have any impact on whether or not they feel less comfortable or more comfortable moving on interest rates?
I would speculate that it makes them feel less comfortable, right? Uncertainty is never a good thing. If Deutsche Bank does suffer some sort of event and Germany doesn't step in, whatever may come, could that weigh on economic growth? Could it cause, corporate America to pause and further hold off on capital expending, hiring, those types of things? Well, those things would all roll up into a slower GDP growth rate, and that would potentially cause the Fed to hold off. I think there'd been some enthusiasm coming out of the September meeting that the Fed could raise rates, and banks responded to that. This obviously calls that into question a little bit.
All right, Jack, thank you so much for joining us. Jack Micenko with Susquehanna Financial Group.
Well, if you're one of the millions of Americans who commute to work by train, this story hits home. A crowded NJ Transit commuter train operating in the third largest transit system in the country plowed into the Hoboken station during the morning rush. It smashed through a barrier at the end of its track, knocking out pillars, killing at least one, injuring numerous others. Courtney Reagan reports tonight from the site of the accident.
It was the height of rush hour this morning when a New Jersey Transit commuter train crashed at the Hoboken terminal here behind me. The Hoboken terminal is just one stop away from New York City, where you do have to transfer to get all the way into the city from here. Governor Chris Christie is calling it a tragic accident and says it's too early to speculate exactly what the cause was or whether or not it could have been prevented.
We don't know what the cause of the high rate of speed was. Therefore, we cannot answer the question as to whether any other apparatus or systems could have slowed the train down or not based on that. So we're not going to speculate on that.
Hoboken, New Jersey is a major commuter town. New Jersey Transit says that on average, 3,900 passengers could have been on board on an average day by the time the train arrived here in Hoboken. Governor Chris Christie does not have an estimate for when the train station will be up and running again. Commuters are urged to look into other options to make their way into New York City. For Nightly Business Report, I'm Courtney Reagan in Hoboken, New Jersey.
A team of safety inspectors arrived at that crash site today. Morgan Brennan has reported extensively for us on the railroad industry and legislated safety changes. She joins us now. Morgan, there is a safety system called, what is it, PTC, Positive Train Control, that governs speed and might, had it been installed here, have averted this accident. Why has it been so slow to be taken up?
Yeah, so Positive Train Control is actually, it was mandated by Congress in 2008 that all the railroads, passenger freight and commuter railroads, have to install this high-tech technology that basically would prevent trains that are going at high speeds from crashing into other trains or crashing into stations. It basically overrides the operator to slow the train down or bring it to a stop. So it's still an investigation that's active. We still don't have all the details, but if it turns out that PTC could have prevented this, that's certainly going to draw attention to this technology that was supposed to be in place by the end of 2015 and then had that deadline extended to 2018.
Yeah. So why is New Jersey in particular so far behind? Because some states have been able to upgrade in a much more efficient manner.
Yeah, so this is an estimated cost to install this for all the railroads in the country is $10 billion. It's a very detailed technology. New Jersey specifically, New Jersey Transit, none of their trains have it yet. They've been a bit slower, as you mentioned, to adopt this technology. And a big part of that is because New Jersey Transit just doesn't have all the funding that it necessarily needs. About a fifth of its budget is actually on hold because of disputes within the state around fiscal budget topics, including that. But it's been very expensive, and a lot of railroads have been having a very hard time installing it, which is why that deadline was pushed.
You could wonk out on this if you really wanted to, but how does it work? Don't wonk.
Okay. I'll try to do this in a couple sentences. So positive train control, it automates the train systems, the railroad networks. It uses airwaves, radio airwaves, to connect the trains to transmitters along the tracks so that the folks that oversee these networks know where every train is, how fast it's moving. The trains can sense where other trains are. It basically automates the railroad system.
And it slows a train down if it's going too fast.
Exactly. So it can override an operator if they're moving that train too fast.
Morgan, thanks a lot. Morgan Brennan reporting.
Well, the nation's economy grew just a little bit faster in the second quarter than originally thought. And although it was better, it certainly wasn't great. Gross domestic product, the broadest measure of goods and services produced across the country, expanded at a 1.4% annual rate. That's up from 1.1% it reported last month. That report showed that growth in exports, which adds to GDP, outpaced gains for imports. It also highlighted an improvement in business investment.
Now to housing, which may be showing some signs of cooling off just a bit. Buying slowed yet again in August, with fewer people signing contracts to buy existing homes. It is the third straight drop in so-called pending home sales. And as Diana Olick reports, realtors blame it on a lack of supply, which is hurting affordability.
First-time home buyers Tyler and Marisha Mullen are doing the final walkthrough before closing on their two-bedroom D.C. home. They knew they wanted it as soon as they saw it, so they wasted no time making an offer. 8 months of house hunting taught them that.
It was a bit shocking when you're trying to find a place within the right price range, and as soon as you start looking at it, it's gone.
The number of listings has been dropping for 15 straight months nationally, and realtors say it is the primary reason for falling sales and rising prices.
Perhaps the buyers are exhausted. They are not excited about the low inventory choices. And furthermore, home prices consistently rising above people's wages. People are getting just knocked out.
1/4 of U.S. housing markets are now less affordable than their long-term historical norms. And nearly 2/3 of U.S. counties are seeing home affordability worsen compared to a year ago. That according to Adam Data Solutions. While some hot markets like San Francisco are starting to see prices ease, other markets in Texas and Colorado are seeing double-digit gains. The market simply needs more homes, but home builders are not ramping up production enough to meet demand. And only now are they starting to turn to starter homes. That'll help first-time home buyers down the road, but not today.
I think that's what we found to be the most surprising is we saw a place listed maybe on a Wednesday and we would schedule to go see it on Saturday, and by Saturday morning we got a phone call that, well, it's already under contract.
Looks good.
The Mullins advice, if you want to move, move quickly. For Nightly Business Report, I'm Diana Olick in Washington.
Deutsche Bank wasn't the only bank in the news today. The CEO of Wells Fargo back in Washington as shares of that bank fell to multi-year lows. This time, John Stumpf faced questions from House lawmakers over his bank's fake account scandal. And members of Congress were just as angry this week as they were last. Wilfred Frost reports from Capitol Hill.
Wells Fargo CEO John Stumpf faced his second hearing on Capitol Hill in just 9 days, coming also 2 days after he agreed to forfeit over $40 million of his pay. His challenge today to provide more detail and convince people he was sorry.
May I respond to that, please?
We'll give the witness an opportunity to respond.
As I said before, I'm sorry that we didn't get this right. I take this very seriously. I'm not in denial, and we will get this right. We will fix this.
As for the detail, we did get it. The 2 million faked accounts number could be as much as 75% lower based on their latest investigation. He also said the full board is being investigated internally, not just company executives like him. And the House committee does plan to investigate the regulators as well as the company, on whom there was mixed opinion. But the focus, once again, was the tone of the hearing as opposed to the content. Lawmakers still angry and wanting more.
The whole board needs to go if they're going to allow someone to be in charge when time after time. You just talked about you fired 5,300 employees. When you found out that they were doing something wrong, they were fired. Because they were doing something wrong. Well, something is going wrong at this bank, and you are the head of it. So shouldn't the board then turn from your own admission? If the buck stops with you, as you came out here and said, I apologize, the buck stopped with me, and you have to also admit that criminal activity was going on in your bank, then you should be fired because it stops with you.
The other big takeaway this week was the rising pressure for other banks to be dragged into what so far has been a single company issue.
We have institutions that are too big to fail. In 2008, we found that they were too big not to bail. The Eric Holder has told us that they are too big to jail, saying that he fears for putting them for bringing a criminal indictment. We now learn that they're too big to manage, too big to regulate. It's time to break them up.
Thus, the other banks will be keeping an eye on developments. So, to sum up, the CEO, John Stump, performed much better today than he did 9 days ago in front of the Senate hearing, but the issue rumbles on for Wells Fargo. For Nightly Business Report, Wilfred Frost in Washington.
Still ahead, why some say Viacom and CBS are better if they get back together. The FCC has delayed a vote on the controversial set-top box proposal. The measure would have opened up the cable box marketplace to competition by requiring TV providers to make their shows and movies available through free streaming apps. But regulators pulled the proposal because not all of the issues have been sorted out. The measure has faced stiff opposition from cable and content providers.
The Redstone family, which owns a majority of both Viacom and CBS, called for the two companies to get back together. Viacom and CBS used to be part of one company until Viacom's assets were spun off about a decade ago. Shares of Viacom and CBS, both rose in trading today. Julia Boorstin takes a look at why these companies might want to reunite.
Sumner and Sherry Redstone's holding company, National Amusements, today proposing that the two companies it controls, CBS and Viacom, re-merge, saying a combination of the two companies might offer substantial synergies to respond more aggressively to the changing entertainment landscape. Now, whether this deal happens is really up to CBS CEO Les Moonves. He said that he'll only do this deal if it's beneficial to his shareholders. And while CBS's market cap is $23 billion to Viacom's $14.5 billion, CBS would likely draw a big premium in the proposed all-stock transaction to make that deal happen. Analysts have raised concerns about Viacom's cable networks, struggling ratings, and higher than average costs weighing on CBS's growth. But there would be cost savings, and greater scale could give CBS more power in negotiations for distribution and more content for its digital apps. For Nightly Business Report, I'm Julia Boorstin.
Snacks and water help Pepsi's earnings pop, and that's where we begin tonight's market focus. The food and beverage giant beat estimates thanks to strength in North America of its Frito-Lay snacks and non-carbonated drinks like Propel flavored water. That helped offset a continued decline in soda. Revenue surged in some of the company's key overseas markets, leading Pepsi to raise guidance for 2016. Let's take a look at shares. They rose a fraction at 107.76. And sticking with snacks, ConAgra, whose brands include Slim Jim and Ready Whip, don't mix the two, posted better than expected earnings thanks to price hikes and less discounting. But revenue did slip a bit. The company's CEO says ConAgra wants to refocus its business on healthier products to keep up with consumer preferences. Shares of ConAgra up, though, 7% at 46.25. Fitbit shares hard hit following an analyst downgrade. Pacific Crest Securities cut the fitness device maker to underweight, which is essentially a sell signal, from neutral, saying sales of the company's latest product were off to a slow start. The fitness tracking band was seen as a flagship holiday product. Fitbit shares finished the day down 11% at $14.81.
Qualcomm may reportedly acquire NXP Semiconductors. The Wall Street Journal says Qualcomm is in the talks with the chipmaker over a deal that could take place in the next 3 months. The takeover could be valued at more than $30 billion. Shares of NXP Semiconductors were up nearly 17% to $96.12, while Qualcomm was up 6% to $67.45. A district sales manager at Insys Pharmaceuticals was arrested on charges he took part in a scheme to pay doctors kickbacks in exchange for prescribing the company's opioid spray. This is just the latest in a string of charges brought against company employees dealing with the drug. You may remember we aired a series about the Insys scandal last year. Insys shares were off 5% to $12.08.
Critics of the Federal Reserve have been out in force. Some say it hasn't moved fast enough on interest rates. Others accuse it of playing politics. And some want to know why it didn't do more to weed out the bad behavior at Wells Fargo. Now, there's another issue. Steve Leisman reports tonight from Kansas City.
The Fed has been criticized by Republican nominee Donald Trump for being political and keeping rates too low, and by investors for confusing communication. But a gathering wave of criticism has received less publicity: the lack of diversity at the central bank. It became a topic this week when the Fed chair faced Congress.
We've had no African-American presidents. We've had 0 Latino presidents out of 134. So I want to make sure that we stay focused on that. I think we can do better than that.
We've made some progress, but we need to do better. At the level of presidential appointments, I would very much like to see, I very much hope that we can see greater diversity in the FOMC.
In an effort to address these concerns, the Kansas City Fed held the first ever minority bankers conference this week in an attempt to identify potential banking leaders who could one day be policymakers. Yellen addressed the audience today and hinted at possible changes to come. Rose Washington is deputy chair of the Kansas City Fed, involved in economic development lending in Tulsa, Oklahoma.
Our money is green, but people are different. I bring a unique perspective to this organization, to the monetary policy discussion, because of the community that I serve, because of the community where I work every day, where my ear is to the ground, collecting data from minority businesses, from small manufacturers located in low-income census tracts.
The issue of diversity at the Fed came to the fore in Jackson Hole this year, when activists met with several Fed officials and called for greater inclusion on the Federal Open Market Committee.
The Fed has done a pretty good job in balancing things over the years, but I think more diversity on the Fed board will bring more insight to what's happening in the urban communities in America.
Amid calls for greater diversity, the Fed's first test will come not here in Kansas City, but in Atlanta, where Fed President Dennis Lockhart has announced he'll retire next year. The campaign has already begun to seek out a minority to fill the post. For Nightly Business Report, I'm Steve Leisman in Kansas City.
Coming up, change of plans. Why some families are rethinking their fall and winter vacation to the tourism-dependent Sunshine State.
It took months, but Congress approved more than $1 billion to fight the Zika virus. It was included in part of the spending bill we told you about yesterday that will keep the government from shutting down. And it comes just as families rethink their fall vacations to states that are dependent on tourism, like Florida. Susan Lee has our story.
The Sunshine State, Florida, is the second most visited in the U.S. after California, welcoming in over 106 million out-of-town and international tourists last year, accounting for $90 billion, according to Visit Florida. This August, the tourism sector took a hit after the CDC, the Centers for Disease Control, slapped a travel warning on 2 neighborhoods in Miami-Dade County. That includes the hot spots of Miami Beach and the northern neighborhood of Wynwood, and that has meant a change in travel plans for some Americans over the peak fall and winter seasons.
Allianz Global Assistance just did a survey of 500,000 travelers who are planning to go to Florida this year as opposed to last year, and that we found that overall travel to Florida during the peak season, which is about mid-November to mid-April, is going to be down about 15%.
Travelers booked 30% fewer trips to Miami, 33% fewer flights to Tampa, and over 15% less flights to West Palm Beach. According to the CDC, as of last week, there were 43 locally acquired cases of Zika in Florida. The state's efforts to battle the spread also claiming a victory last week, with the CDC lifting the travel advisory to the Wynwood area after no new cases of the illness were reported in the last 45 days. Relief for Miami operators that have experienced some lost business.
We have 53,000 hotel rooms countywide, and groups meet in hotels. And the cancellations have been in the hotels, small groups.
Most major tourism businesses operating in Florida say that they haven't seen any major effects from Zika, including Disney, which operates theme parks in Orlando. The company said earlier this month that the virus was having no real impact on cancellations or future bookings. Also, cruise lines that operate out of Miami's ports.
I think the Zika concerns really didn't impact us very much. The reality is every year there's something, Zika this year, MERS, Ebola, those things come up.
Bookings for trips to Florida may have been down in the month of August, according to this new survey. But like the battle to control the Zika virus, the state's tourism sector is also hoping fortunes turn around soon. For Nightly Business Reports, I'm Susan Lee.
To read more about the potential impact Zika could have on Florida travel, head to our website, nbr.com.
Here's another look at the dramatic day on Wall Street today. The Dow closed down 195 points. The Nasdaq fell 49. The S&P 500 was off 20. And that is it for Nightly Business Report tonight. I'm Sue Herrera. Thanks very much for joining us.
And thanks from me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you right back here tomorrow.